These stocks have the potential for AI-backed growth going forward. These are the technology stocks to buy after a 20% to 30% correction, as they represent companies positioned for AI-backed growth and cash flow upside. NVIDIA revenue can increase tenfolds by 2030 to hit $1 trillion and would imply operating cash flow of more than $400 billion. Microsoft Azure AI revenue potential is $200 billion in the next 5 years, and additional growth from Copilot Pro, AI assistant, for Microsoft Office 365. Meta Platforms, going through a multi-year investment cycle that will boost growth from AI. Let's dive in. Here are the 3 technology stocks to buy after a 20 to 30% correction. Welcome to Timely Investment Research. Technology stocks have been surging higher in 2024 primarily on the back of AI-driven growth potential. Research indicates that by 2030, AI will contribute $15.7 trillion to the global economy. However, technology stocks have witnessed a sharp rally, and it's a good idea to wait for some correction before considering fresh exposure. As a matter of fact, some of the high-flying names have already corrected from highs along with the broad market correction. In my view, a 20% to 30% decline from all-time highs would be a good opportunity to buy for investors who missed the rally. At the same time, a deep correction would be an opportunity to average up on quality technology stocks. This video focuses on 3 technology stocks to buy after correction. In my view, these stocks are worth holding until 2030 for multi-bagger returns. Number 1. NVIDIA. NVIDIA is already in the buying range after a correction of 29% from 52-week highs of $140.80. However, considering mixed sentiments for the broad markets, I would prefer gradual accumulation than a big plunge. Talking about the growth potential, Fundstrat Global Advisors believes that NVIDIA's revenue can 10x by 2030 to hit $1 trillion. This would imply $400 to $500 billion in operating cash flows. Given this projection, I would not be surprised if NVIDIA is among the first few companies to touch the $10 trillion valuation mark. For that, NVIDIA must stay ahead of the curve, and the technology company is investing heavily towards research and development. The technological edge is evident from the fact that NVIDIA company controls 80% of the high-end AI chip market. In the medium term, NVIDIA's next-generation Blackwell GPU chip is likely to be the growth driver. Overall, NVIDIA is a cash flow machine and is well positioned to stay as a market leader among AI companies. This will provide ample scope for shareholder value creation. Number 2. Microsoft. Microsoft stock has corrected by 15% from highs of $468. A forward PE of 30.3x still looks stretched, and I expect further correction before Microsoft stock looks good for exposure. In my view, levels between $350 to $360 are an attractive buying zone. The first point to note is that growth for Microsoft Azure has been somewhat disappointing for fourth quarter 2024. Microsoft Chief Financial Officer Amy Hood believes that Azure growth should accelerate in the second half of 2025. With relatively soft earnings in the first half, I expect correction and consolidation for Microsoft stock. It's however worth noting that Azure is likely to be a long-term value creator. According to Goldman Sachs, Azure AI has a revenue potential of $200 billion in the next 5 years. The investment phase will therefore be followed by growth acceleration. At the same time, Microsoft is expected to benefit from subscriber growth from the company's Copilot Pro, AI assistant. Number 3. Meta Platforms. Meta Platforms is another long-term value creator that's worth grabbing on declines. The stock had touched highs of $543 in the beginning of July. There has been a correction of 10% from those levels. I would wait for a deeper cut before fresh exposure. An important point to note is that Meta expects CapEx of $35 to $40 billion for the year. With CEO Mark Zuckerberg guiding for a multi-year investment cycle, it's likely that CapEx will remain high in the next few years. Only after this investment cycle, the company's AI products to scale into profitable services. It makes sense to buy Meta Platforms stock during the investment cycle and reap benefit when growth accelerates in the next few years. Of course, Meta has been delivering solid numbers. For second quarter 2024, the social media company reported advertising revenue of $38 billion. While Reality Labs continued to bleed, I am focused on the long-term results. I must add that from a geographic perspective, there is ample scope for advertising revenue growth from emerging markets. This will support growth and cash flow upside. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.